Hey, this is Chico here with you. Yeah, I just want to talk about our portfolio, give you an update. So, yesterday, with the delay in the reciprocal tariffs from the Trump administration, stocks surged across the board through the all stock markets, and our account is back up to 97K. We started out with 100K, and that's only half of it invested. We still have 54K cash, and our stocks are Robinhood, Broadcom, Avadco, and Carvana. So today I just want to talk a little bit about earnings released by Carmax. Carmax here, as you can see, plunged. It plunged 17% because it missed earnings per share. Other than that, they still had growth and all that. And the other problem was they retracted any forecasts, I believe. So that wasn't good for them. As to why they had to retract forecasts, I'm not sure. I guess maybe something to do with the tariffs causing some uncertainty. But they're in the used car market. I would think they have a somewhat of a like at least provide some kind of range um, to their outlook. But yeah, I mean, if the economy's bad, I suppose then they might not meet those expectations, or they will have to guide very low, and that might hamper their stock. But I mean, their stock is hammered already. So okay, let's just take their word for it, and it's too hard to guess. And what I do see here is this is off their webpage. It's basically their results, and so you can see that in the last quarter, retail sales are up 6.2%. Comparable store used units increased 5.1%, and wholesale increased 3.1%. So that's good. Other thing is they were able to buy more cars from consumers and dealers, 5.3% from purchase from consumer, and interestingly, 114% from dealers. I don't know if dealers had like a lot of inventory to unload, so well, perhaps that's good for CarMax. So now they have offering a lot of options and variety to their customers. So yeah, their revenue was I think kind of in line, but it was really their earnings per share that they missed on. That's what it seems like. The articles in the news are saying that they missed that, and that kind of helped tank their stock. And then yeah, it's kind of like continue growth for them, and that's what they target for. So nothing exciting basically, and CarMax is different than in a way than Carvana. First, Carvana, their stock has been going up for the past in the past year or two, and CarMax has been just basically flat. They just kind of anchored down with their business model, selling cars through from their lot in addition to online sales, where Carvana is really more about online sales business model. And yeah, with that said, I guess, and all the tariffs that are going on, I was saying that Carvana might be a stock of interest to consider, and we bought it for our portfolio here. We bought it at 183, and today it's already at we're actually in the positive territory with Carvana, given all the seesaw action. But okay, this is short term. I think I got a more of a longer out term look for Carvana with all the tariffs and everything, and auto parts going up. I think definitely it's favorable for the used car sales market to pick up more business and profitability in the near future. But of course, the thing that is tanking these stocks is particularly Carvana is like they have expectations, and when the economy might go into recession or might basically be stale or bad, any of that, it's very sensitive to to sellers on the market, and so its stock price would take a hit. Anyways, I just want to touch on CarMax. So I haven't actually read the transcript yet or listened to the earnings call. I think I'll do that. But in the meantime, I just want to mention this to you, and maybe there's a good chance to pick up some more Carvana if it further dips. Right now, for our portfolio, we're not too bad. We're down from 100K to 97, and for the amount that we invested, it says 4.96%, and we're down only 2% from 100K. So not too shabby. I think we will just look for some more, wait for some more deals, because the tariff situation is, despite the delay in the tariffs for the reciprocal tariffs specifically, it's not a very good outlook for the time being. But I do like the stocks that we've have. Robinhood, they're making more features and products for their clients, particularly predictions. Avago Broadcom focuses on likes high margin chipsets and across different business segments, and that includes AI. And so it's ran by Hock Tan CEO. The CEO is Hock Tan, and I think he does a remarkably good job. And they also announced, I think, $10 billion in buyback 2 days ago for their stock. So yeah, that's kind of nice. And Carvana, I guess, is around the 200 mark, but maybe it'll come down further, and we can buy some more for our portfolio here. All right, that's all I have for you today. I suggest if you're interested in Carvana, wait for the transcript for Carmax for the last earning, which was released today. Otherwise, maybe you've listened to the webcast. If so, that's great. All right, take care for now, and catch you next episode.